Were there any surprises in the data when you were putting the forecast um, together? Because there were a lot of expectations about how bad the economy was going to be. Um, did you find anything that surprised you?
I don't. I think maybe the one thing that I'm not sure is being communicated, and we didn't communicate this enough either, is things like the federal package, the CARES Act, right? The nature of it's actually really good. The expansion of the unemployment insurance benefits to help impacted workers, even the one-time recovery rebates to households. These are the right types of policies to bridge households and firms to the other side of the public health crisis. And if you try and model the numbers here, they actually do a really good job in the short term of supporting income and business revenue. The issue there is the duration, right? The whole policy was designed that everything would be okay in July. I don't think things are going to be okay in July. Even if things are getting better and things are opening up, we're not going to be healthy in July. And so we really need, some other boost there. But the nature of the programs was something I think was actually really well done and on for a legislative type of policies on a very short timeline. So I think both, you praise it for the types of things they did, but you criticize it for maybe the duration of the policy. But they can always go back in and do another round or a few rounds of it as needed. So I think the big risk for the economy is the firm closures, and what's going to happen there. Two more points. One would be um, when we think about firm closures and the risk to the economy, looked at times is the importance of regional anchor employers, right? The pizza parlors are being hard hit today and they need assistance, and we don't want them to go under. But if the mill goes under, it doesn't matter how much assistance you give the pizza parlor, they're going to be in trouble long term. So I think we've seen that certainly in our timber dependent communities in the last 40 years. That when that anchor employer leaves, you see some broader struggles. And so I think making sure that we're on top of this from a regional perspective, and it's not just manufacturing. It can these other big employers for some of our communities. Monitoring their health and making sure they're viable is a very big thing we can do for long run growth. More specific to Oregon, would be the firm closures is a macroeconomic issue. For Oregon, another macroeconomic issue is migration. We know people don't move during recessions as much as they do during expansions. People follow the jobs. And so our migration will be very low for the next couple of years until people have clarity on the public health and the jobs return. But as soon as those jobs return, people will move to Oregon again, we think. And so that is really a long run determinant of growth is that ability to attract and retain working age households. So anything that puts that at risk makes us worried. Luckily, Oregon hasn't been a hot spot for cases, so maybe there's not a growing public perception that you don't want to move here because you're going to get the disease. And so I think we think that ability is intact, but anything that puts it at risk would then alter our long run assumptions for Oregon's economy and revenues.
A couple of things I would like to check on the revenue side to make sure I understand and am accurate in that. On the, I'd thought that there were like 2.5 billion in reserves, but 1 billion of that basically was the ending balance, and that's being eaten up
That's
already.
right.
So it's not going to be there. Another,
Correct.
so there's okay.
So we have last forecast. Yeah, we had about 2.5 billion in effective reserves, as we called them. In a little bit of one, just north of 1 billion was the projected ending balance that was unspent. But now that we lowered the general fund by 1.9 billion, that 1 billion goes away, of course. So it's already served its purpose as a reserve account. They didn't have
Okay.
to do anything, but it already softened the blow a little bit. And we have 1.6 billion today in the Education Stability Fund and the Oregon Rainy Day Fund. Those are expected to grow to 1.75 billion here in the year ahead as we get additional lottery deposits into those funds.
Because there's money that automatically flows into those funds, even though, regardless of how the economy is doing.
Exactly. 18% of lottery proceeds go directly into the Education Stability Fund, no matter what. Of course, those lottery sales are lower today due to the recession.
Right.
And on the rainy day fund, there's automatic deposits related to increases in corporate taxes from Measure 67 back in the last recession when the voters approved that. Those are automatic. And then ending balances from the general fund then get transferred as well. But we're not projecting that for this biennium given the situation. But over the last 10 years, that certainly has added up.
Then one other thing I was interested in your and Mark Mullen's comments about sales taxes and
Yes.
how we do have more sales taxes now, even though we are not a sales tax state.
we, we are not a sales tax state, but we Oregon's never been more exposed to consumer spending and taxes on consumption, and so the thinking is with leisure and hospitality taking the brunt of this upfront hit to the economy, places like Las Vegas and Miami related places will take a bigger hit, and their sales taxes will too, which is something they're not used to seeing. And so maybe that will, inversely help Oregon relative to the typical state. Now everyone's going to get hit bad, but maybe we won't be hit quite as bad. But of course, we did put in a couple major consumption-related taxes in recent years. The new vehicle privilege tax from the transportation package 3 years ago. So car sales are really big for sales tax states, and so the vehicle privilege tax is going to be big for Oregon. And then, of course, the new corporate activity tax, which is a broad-based tax on gross receipts. As households aren't spending today or not spending nearly as much as they're used to, we will see significantly lower corporate activity tax revenues than were previously assumed, prior to the recession.
Anything else that you'd like to share?
No, I think the only other thing I would add from a forecaster's perspective, we really do our best to try and put in our best guess, and that the probability that our forecast will be too pessimistic or too optimistic is about balance. We're not trying to err on one side or the other. Of course, in a recession, and of course, when we're talking about a public health crisis, contagious disease, we hope we're too pessimistic on that front from a humanity perspective. But from a forecast perspective, we don't want to put in too many revenue losses, because then the public sector will have to cut more than is necessary. But we're also not trying to be optimistic where at the end of the budget period they're scrambling to reconcile the books and maybe have to borrow their way out of a recession, like we did back in 2002, 2003.
Well, thank you very much, Josh. I greatly appreciate your time. I hope you and your family are doing fine, staying at home as much as you can and
Yes.
staying safe.
Thanks, Dick. Yeah, no, always happy to chat. If you need something, just let us know, and I hope you do make it up to that brewery up there.
Okay, thanks so much.
See ya.
Bye.